Welcome in. Coming up on today's program, optimize your retirement paycheck. How do you juggle retirement planning 10 years out from retirement and in retirement for you and your parents? You know, we're moving from a world here of accumulation, savings, and building up assets to decumulation, spending some of that down. And a retirement paycheck is how you will pay yourself through your retirement years. But today, I'm going to show you a more integrated, holistic approach with ideas of how to optimize that paycheck. You know, people might say, hey, I don't rotate my tires. I don't floss much. I haven't even flipped my mattress in 5 years. How am I going to optimize my retirement paycheck? Or they might say, the only way I'm going to optimize it is to keep working. Well, we've got some good news for you. You're watching What's Next with Money, a program with smart insights to guide your financial decisions. So we're going to cover today 8 areas in a fast-paced method about optimizing your retirement paycheck: work, Social Security, home and mortgage, insurance, savings and investments, retirement plans, debt and fraud. And the underlying theme is to establish or stretch that paycheck in all of its forms. We're really going to give it a good workout. And looking at retirement from these 8 common and interrelated, yet sometimes misunderstood perspectives. So here is the really cool thing as you optimize one of those 8 areas, and we're going to show you on each one, it can have a positive effect on one or more of the other key retirement areas. This holistic approach will help you build momentum as you progress. And the great thing is, this is based on research with the National Endowment for Financial Education and a think tank we held and I was privileged to lead, bringing together the best minds in this area. This is a national foundation that I used to work for, and I was privileged to help create this. So the first 6 of the 8 areas, we're going to play offense, really build. And the final 2 of the 8, we're going to play defense. And we have several What's Next with Money videos on retirement topics that we'll have links for. Retirement wealth gaps, to work or not to work after retirement, recognizing the warning lights on your retirement dashboard, and the big one, when to start Social Security. So here we go with our 8 decision areas to optimize that paycheck. Number 1, aim to work at least until your full retirement age. Now, for most people, this is age 67, but for a few, it might be the later part of age 66. This has many benefits. You prolong any health care coverage you have with your employer. You have more time to build your retirement assets through growth, compounding your contributions, and those fantastic employer matches, which we call free money. And this also increases your ability, and you've got more time and the means to reduce debt. Plus, more time to plan and practice for retirement. You and your spouse will build consensus around a realistic plan. And then there's time to strengthen, test, and research your part-time or small business work ideas, including skills development and upgrades. Also, you might consider phased retirement at the full retirement age, like part-time work where you work right now. This can help keep that steady work paycheck continuing. Now, work relates to other of the decision areas, and this can help you build momentum. For Social Security, by delaying claiming Social Security, you receive a much larger monthly payment over your lifetime. And then with retirement plans, you're going to keep adding to that retirement nest egg instead of decumulating, depleting it too quickly. For insurance, you're going to keep the health insurance longer, and ideally at age 65 when Medicare eligibility starts. Let's move to optimize point number 2, Social Security. This is a beautiful lifetime inflation-adjusted annuity that's government-backed. Now, taking Social Security payments or claiming too early means locking in receiving less money each month and over your lifetime than you would receive if you had waited even a few years. So try with Social Security to go at least to your full retirement age. And remember, early claiming starts at age 62, really to 67. And if you do that, you're going to lock in 25 to 30% less of that paycheck, a smaller Social Security paycheck, than if you waited till the full retirement age, which again for most folks is age 67. Now, you can wait to claim up to age 70. And here, from early retirement at age 62 to 70, that paycheck is going to be 70% higher by waiting to claim later. And even if you don't hit 70, if it's 68, 69, or a few months in between, it's still going to be much higher. What is really happening here is an 8% per year increase by delaying. Now, you've also got coordination opportunities with your spouse. And perhaps in a special case, with an elder in your family, family support. Let's say you've got someone in your family who's going to be almost wholly Social Security dependent. They don't have outside savings and certainly no pension. You could all pool your money as adult children to help support that grandma or grandfather to let them delay claiming Social Security later, to lock in that higher paycheck since that's their main and only source. So that's a creative concept to help somebody else. And if you make the wrong choice in claiming, Social Security Administration generally gives you a 12-month do-over period. Very few people know about that or take advantage, but there is an opportunity to reset. Now, building momentum in Social Security relates to other areas like work. And this we call a bridging strategy. By working longer, you can delay claiming Social Security and thus increase the size of that benefit. And you might even benefit from higher wage earnings and earnings over that time. Now let's move to number 3 to optimize your paycheck in retirement: home and mortgage. Your house may be your biggest asset, but be careful about viewing the value of your home as if it were your retirement plan. Remember, with housing, you've got taxes, commissions, closing costs, plus the dynamics and the burden of relocation. And remember, housing prices fluctuate and you need other forms of savings. Reverse mortgages should be evaluated carefully. And consider a reverse mortgage only a financial life preserver. They're also known as home equity conversion mortgages. Plan that your home equity, in whatever form you use it, as one of the last assets you use in your retirement. Now, relating to other areas, to build momentum, fraud. You've got to protect home equity from mortgage schemes by making decisions based on research and carefully investigate charges, fees, and other options. In the area of debt, if possible, plan to pay off your mortgage and otherwise reduce housing costs before retiring. Think about this. The 10 years before retirement is your debt reduction decade. Now, if you're getting value from this video, please hit that subscribe and smash that like button. This helps move our content to more people, and it's all free. Here's number 4, insurance to optimize your retirement paycheck. Your retirement plan is not complete until you know how you're going to pay for medical and long-term care needs. Plus, in the area of insurance companies also sell many forms of annuities. Putting at least part of your retirement savings into an immediate fixed annuity that will give you a monthly payment for the rest of your life. Or it could even be for a term of years to create a regular source of income, including setting that immediate fixed annuity to a later set of term of years to help you in your really older years like age 80 or 85. Now, with insurance, we relate to other areas to build momentum. For work, you're not going to be eligible for Medicare until age 65, so use that employer-provided health care coverage as long as possible. And for debt, understand that Medicare is not a free pass. It's only going to pay for about half of your health care expenses. To avoid debt, have a plan to save for out-of-pocket medical expenses and premiums. Now we're moving really quickly, jumping into number 5, savings and investments to optimize that retirement paycheck. You don't know how long retirement will last. So it is important to invest in diversified assets even as you enter retirement. And consider how much risk you can tolerate in making your investments. And get good advice about how to best invest your assets to fit your personal situation. Consider investing part of your retirement savings in an annuity that gives you a steady set of paychecks for your entire retirement. But be aware that annuities can be complex and there are different kinds. For financial products, we suggest immediate fixed annuities. So also think about setting aside at least a year's worth of living expenses in cash to avoid having to sell investments at low values like during a market downturn. Now, to help you build momentum, this area, savings and investments, relates to work. Cashing out or borrowing from your 401k savings before age 59 and a half usually will cost you money in taxes and penalties. Now, we here at What's Next with Money call that leakage, and it can have a negative impact on your ability to pay for your retirement. In the fraud area, never forget that your retirement money is being targeted by con artists, internet fraud, and financial scams. Never make decisions without double checking the facts and the people you might do business with. If it sounds too good to be true, it really is. So, number 6, retirement plans to optimize that retirement paycheck. Don't cash out your retirement 401k savings early. This will always cost you money, and there are better ways to pay yourself through your retirement years, including using a rollover or keeping money in your company plan. And more companies, especially big ones, allow that. If you borrowed from your 401k, make a plan and pay that back. And don't forget, employer pensions provide, if you have one, a steady paycheck from your retirement in the form of an annuity. But be sure you understand all the terms of accepting any early retirement incentives or lump sum payments in lieu of an annuity from the place where you work now. Now, a momentum builder here in retirement plans is work. Working longer allows you to continue contributing to and growing your retirement plan. For Social Security, of course, use your pension, if you have one, as a bridge to claim Social Security later up to age 70. By delaying taking Social Security, you're going to receive a larger inflation-adjusted benefit. And unlike most pensions or immediate fixed annuities that you might purchase, Social Security is indexed for inflation. So you're going to have much more purchasing power in future years. Now, we've moved into 6 areas of playing offense for your retirement paycheck. Now we're going to play some defense in the area of debt and fraud. Number 7 is debt as we optimize your retirement paycheck. Now, to maintain a predictable cash flow in your retirement years, pay off your consumer debt and those credit cards. And don't borrow new money before you retire. And don't borrow money during retirement unless you know how you're going to pay it back. And consider those 10 years before retirement as your debt reduction decade. And always maintain an emergency fund. Now, in the debt area, this relates to home and mortgage. Don't take new debt against your home. Instead, reduce existing debt if possible. For retirement plans, don't borrow money by spending your 401k savings before you retire or taking a 401k loan. This will have a negative impact on your ability to pay for retirement. Now, our last area, fraud. You've worked hard building up your retirement assets. Now you need to protect them. Older Americans and even experienced investors are highly targeted by scammers and fraudsters, so be especially on guard. Make no money decisions quickly and never without getting a second or third opinion from people you trust. And in the fraud area, to build momentum, retirement plans. Get good objective advice from a qualified, certified financial planner professional about how to best invest your assets to fit your personal situation. And in home and mortgage, protect that home equity from mortgage schemes by making decisions based on research. Thoroughly investigate charges, fees, and other options. So today we've showed you how to optimize that retirement paycheck by looking at 8 areas. Work. Social Security, home and mortgage, insurance, savings and investments, retirement plans, debt and fraud, all based on this great research from the foundation over at NEFI. Now, we have other retirement video links in the comment section and the description. And be sure to hit that subscribe and like button, and don't forget to share. And I'm Brent Neisser, looking to see you next time on What's Next with Money.